G'day, fools. Scott Phillips here from The Motley Fool. I'm the Chief Investment Officer of our business down here in Australia. And this time around, I'm bringing you one of our favourite segments, internally at least, our favourite investing books. And I'm joined by Trevor Machedzi. G'day, mate. How are you?
Hi, Scott. Good day. How are you?
Mate, I'm exceptionally well, and I'm pretty pleased you're back from holidays, which is good. But also, you're bringing us one of the books that I have actually not read. I get asked for book recommendations a lot, mate, and I normally give recommendations of books I've read. Obviously, you would expect. This is one book that I've actually recommended to people. I have not read a single page of it, but I know the author, at least by reputation, really, really well, and I just know this is obviously a spectacularly great book. Unless you tell me otherwise, and I'll give you that chance. But Morgan Housel is the author of a new book, or a newish book, called The Psychology of Money. Sold more than 1 million copies, I saw on Twitter the other day, so he's doing really, really well.
Yep.
Morgan Housel is an ex-Motley Fool contractor and employee. He's still a friend of the Fool, works at the Collaborative Fund. He's a really great writer and a really insightful guy. He's one of those people who takes a bit of a, not exactly a left field look at things, but just has a really great way of thinking about questions, raising topics, highlighting examples. That is really, really cool. And mate, I'm a massive, massive behavioral finance, behavioral economics guy. It is so dramatically important for our viewers and our members and readers, of course, as well. So I'm going to stop talking and ask you to tell me, because I haven't read it, about The Psychology of Money, mate. What did you think of it? How did you find it? What is it about? Tell us the story.
Yes, Scott. So I think for most people that are within the investment space, you're always reading math-based or science-based investment books, right?
Yes.
When they teach you about discounted cash flows, when they teach you about price to earnings ratio, when they teach you all the things about the science around the investment profession. But I think there isn't quite much literature when it comes to the psychology or how people interact or behave when it comes to money. And this book really touches on some of the most important topics or subjects around the psychology or around how people relate with money. And I think that one of the things I really like about it is that Morgan, does go into the gray areas around financial decisions, right? And it really highlights through so many different stories that when it comes to making personal financial decisions, it's not always about the best or the company with the lowest PE ratio or the company with the lowest price to sales ratio or whichever other mathematically based metrics that we used. So this book is really about the psychology. It's really about how people relate to money. And the way that the book is structured with around 18 short stories. And within each story, Morgan does a deep dive to highlight one particular key takeaway, and he gives really brilliant examples of how this psychological attributes have played out in real life through various examples that he picks up around the world.
That's fantastic. I'm really looking forward to reading it, mate. Morgan is a great writer. I'm not surprised in your description. He loves a good story. He loves it, because humans learn from stories. I think I've said in a previous one of these videos actually that Morgan himself, actually one of my favorite tweets from him, but I actually want to disagree with, which says most books should be pamphlets, most pamphlets should be blog posts, most blog posts should be tweets, most tweets shouldn't be sent, right? Is his idea. And the idea is basically, if you condense stuff down to the really basic fundamentals, that's important. And I'm not sure if it's even still agree. I'm going to make a bet that he would actually not even agree with himself now, because the power of story, speaking about psychology, right? The power of story is so dramatically relevant. And as you say, if you can bring some great examples to highlight what he's talking about and some great takeaways as investors, super important. We also know Warren Buffett, of all people, so that his most important attribute is not his intelligence, not his reading, but his temperament. So if I've got Morgan and Warren on one side, I don't reckon you can stack enough people on the other side of that to convince me that they're wrong. So that's obviously the key from the book. Can you give us a couple of examples, about a couple of things that stuck in your mind that you particularly enjoyed, a couple of takeaways from the book?
Yeah. So, I mean, Scott, I really enjoy all these 18 short stories, but obviously for this video, we won't cover all the 18. But I really recommend that our listeners and viewers, they should really buy that book, because all the 18 short stories are really, really, really good in terms of the psychology of money. But the few ones that I really like, especially the first chapter in the book, is called No One is Crazy. Right. And it's a really important first chapter, because in that chapter, Morgan really touches on, like, people make financial decisions. Some of it is really based based on their life experiences, right? So for someone that grew up in a family with very tight finances, they've got a very different take on money, right? Someone that grew up in a first world country has got a very different take of money compared to someone that grew up in the third world or emerging markets. Right. So when he says no one is crazy, he's just saying that don't be judgmental around how people make financial decisions, because unless you know their life experience, right, you can't really tell from what vintage point that they're looking things at. So the first one is called no one is crazy. And then the second one, which I really like, and we touched, I think, on this subject in our own internal communication this past week, is called Never Enough. Now, this chapter talks about, if you've ever wondered why some of the most successful people went on to do insider trading. So someone is worth $200 or $300 million or $1 billion, and then they go on and do an insider trade deal just to make an extra 100,000. So you're wondering, how is this even possible? I think recently we had an example of another a partner at a consulting firm, McKinsey & Company, who is being charged in the US for insider trading. I mean, just looking at the internet, partners in McKinsey can make $500,000 to $1 million in a year. So you're wondering, why drove this person to be able to, do an insider trade just to make another 100,000? So this chapter is called Never Enough. It talks about the ability to recognize, right, when something is enough and not just keep on pushing and jeopardize everything that you have done. And the other one that I really like is called Getting / Staying Wealth. Now, this chapter really emphasizes the point that getting wealth is not as difficult as it is staying wealth, right? And Morgan just provides some good examples of people that really made it to the top, but they just couldn't stay wealth for a variety of reasons. Again, around the psychology of how they relate to money on a day-to-day basis. So, I mean, this is quite popular, especially among sports stars. People can make $300 million in their career. And then after a few years, you hear that that person is broke. So you're wondering, how can you blow $300 million within a space of few years? So in this chapter, Morgan really touches on some of the key aspects around how you should think about staying wealth. And then probably the last one I can touch on is really a chapter called You and Me. And I really like this chapter because I also used to be a victim of this behavioral, this psychological trait. But that chapter really talks about, the ability to know, or the peril of playing a financial game based on someone else's, or like, let me say, is the perils of copying someone else's financial game, right? So he says that if you look at the market, different people are playing different games, right? Some people are traders, so it's a different game. So they are they buy a stock or a cryptocurrency or this hot stock, and then they flip it within the next 48 hours. It's all good because that is the game that they are playing. But if you're a long-term investor with a long-term outlook, you shouldn't play a similar game, right? So here Morgan really just emphasized the point that when it comes to personal financial management, know which game you are playing and stick to that particular game, and don't always be copying all the new shiny things which are coming up, or which other investors are really which is hot, let me say, in the market for any particular moment. So I think those are some of the top 4 topics that I can highlight, but all the 18 topics are really, really nice. And I really urge our listeners to go and read this book.
There you go, mate. You've whet my appetite for it. As I said, it's been one of those ones on my reading list for such a long time, one of my must-buys. I actually have it on either Audible or Kindle. I can't remember which, but I'm going to get a hard copy. I haven't put it on the shelf behind me. It's one of those books I have a feeling that grabbing a copy of physically is probably something that I'll refer to over and over again. Trevor, thank you for reading it, so I haven't had to yet. And thank you for giving me the incentive to actually go and get that book. The worst part about doing this segment, by the way, is every week someone gives me another book, and I haven't read enough of them yet, so I'm going to have to put some time aside for reading. But I think I'll put this one at the very, very top, mate. You give a great review, a great recommendation by a bloke who is a great writer, as we both know. So, Trevor, thank you for spending your time with me. Fools, thank you for watching our favourite investing books. This is a little bit of a nerdy segment that we just really love and we hope you'll benefit from as well. We bring you a book every week that we think will make you a better investor, or in this case, just a better money manager, it'll give you a better ability to understand your own money habits, your own money psychology from Morgan Housel. Trevor, thank you. And Fools, thank you. Until next time, Fool on.
Thanks, Scott. Full on.